Let's see if we're live. Now I want it to go and it doesn't want to go. Oh, here we go. All right. So Kyle, thank you for joining me today.
We're
you
here.
were you're so kind to show me what you do on the charts with German 30. So this is just a disclaimer. Kyle just started trading like 5 months ago, and he started out with forex, and then he quickly switched over to indices, and he's been having like some really good success with it. So I asked him to come on today to show me um, what he does, like when he gets ready to look at a trade and decide what he wants to do. So he'll be walking us through this today. Um, and yeah, so let me go ahead. Let me share my screen, or not share my screen, give you the capability to share.
There you go. I was just about to say you have to disable that.
Android genius.
There it is.
Okay. So I gave you the capability
All right. That's very
to do
nice of
it.
you.
I know.
It's
I'm so
very nice of
nice.
you to allow me to ruin your podcast.
It's not- Kyle, I don't know why you say that. Like, I don't think you're gonna ruin it. Whatever way you're doing it is working. So, first of all, can we just clear? Okay, I know you got your chart set up. Can
Got
you
my
pull
chart set
up?
up.
Is there another provider that you can look at just to show a blank chart so you can show people what you add on to the chart in order to prepare yourself to trade?
Let me
So
see.
like I think that one is Oanda. There may be another one. I think there is another one.
Um, Here. Why not? I could just take this stuff off.
But it's already marked up, right?
Oh, I have different windows open.
Oh,
Yeah,
okay.
because and it'll kind of go into my process. I can explain that to people. Wait, so you just want me to find out a completely new chart?
Yeah, a blank chart. So coming in, if they were to pull up this pair, not you trade gold too?
Come on now, I got to explain how all of it kind of correlates.
Yeah, okay. Teach me, sensei. Teach me.
All right. So you said you just want me to pick something that. All right. So
Oh, it's
this is naked.
I hear your puppy.
Yeah, she is not happy that we are not playing with it right now.
I see. Okay,
But
go ahead. I'm sorry.
this too shall pass. She'll get over it. All right. So basically, what I do every morning, and I kind of got away from it, and I noticed this week in particular. This week in particular, I've had my best week in the amount of pips I caught and the amount of um, I guess if you want to call it results of the trade. I only lost one trade
Out of
last
how
week.
many?
I took 8 trades. I only lost one trade, and the reason
Wow.
why I lost that trade was because I didn't trust my analysis. I jumped out of the trade. Um, I jumped out of the trade too early because I thought I
Okay.
was going to hit stop, and then I wound up jumping back in the trade literally like 2 minutes later, and it did exactly what I thought it was going to do, and it didn't hit the stop. So
Trust your analysis.
I know, and that's all I could think of because you always say I gotta trust my analysis. So that was my mistake. But I thought I had a really good week. With, like I said, the amount of pips I caught, I was happy with the amount of trades that I won, and I was happy with my bottom line that I walked away with. So every morning, what I wanted to consistently do was get back to hitting my routine. So my alarm is literally set for 7:10 every morning. Alarm goes off, wake up, thank God for blessing me with the day, another opportunity to make an impact in this world. And then
Yeah.
I head over to the computer and I turn on the computer. The first thing I do when I'm turning on my computer is while it's warming up and pulling up my charts and stuff, I'm gonna go to Bloomberg and I'm gonna click stocks. Bloomberg gives me a lot of news. When you're trading indices, you look for fundamentals. You look for things that might have happened while I was sleeping. Specifically, when I'm trading German 30, because I
Mm-hmm.
usually trade the London session. And what I've noticed, this is just in my experience, I've noticed that I've always hit a sweet spot when I started my trade somewhere around 7:15, 7:30. It gives me enough time to get out of the trade before the US session opens, and I get
Mm-hmm.
that huge impulse candle that I was always wondering why I was getting these huge impulse candles at 9:30, even though I was in the London session. And then Ryan kind of enlightened me to it, that there's a huge impulse when the US market opens. And so what I kind of did was put together a schedule that allows me to get in the market, make a trade, and be done essentially by 9:30. So
Mm-hmm.
I go to Bloomberg.com, I click stocks, and I'm gonna go to the Europe, Middle East, East Africa, or Middle East and Africa.
And what
And
we looking for in here?
what you're looking at is news. So you see the DAX, which is the German 30 index. And right
Yep.
now it's negative. It closed negative on 9/4. So it might open negative for London session, which would be good if you're looking to jump in for a buy. But after I've done this.
Wait. Go back.
Okay.
So you said, so it's red and it's negative, or pink and negative, and you're saying when it's like that, that's a good opportunity for a potential buy.
Yeah, that tells you, or that gives you, because these are kind of futures, it kind of tells you where the market might be going. So the market might be, wait, did I say buy? I'm sorry, I meant sale.
Yeah.
Sale, sorry.
Okay.
Yeah.
All
So,
good.
yep. So we'll be looking at a sale. So,
Okay.
so now what I do is I'll go to my chart. This is just a naked chart before we get to my actual chart. Now, two things.
That is not naked, but
I
okay.
know, but I'm gonna explain why it's naked as compared to when the emperor has on clothes. So when I first started charting and first got into trading, I know you were helping me out, Benny was helping me out, but I was in an Earn While You Learn group. And what they tried to do was make trading as simple and as easy as possible for people who just didn't have a lot of time to really invest in it, but to still be able to pick it up. And so one strategy that they really highlighted, because it was pretty easy to kind of see, was the MA cross. So what I always did on my trading view charts, and this even when I was in pairs with you, and we all talked about, we all have our different indicators. So I would set up my 50 and my 4. And I do that because they kind of, even though they're not price action in real time, they're an indicator, and they kind of give me an idea of the strength of the market and what's going on in the market. So yes, my eyes can see that, let's say this is a move that's a sale, but it also gives me a confirmation because I have a cross on my 54 and I have a candle that's open up and closed underneath that cross. So when you have a 54 cross and the 4 crosses to 50 going down and the candle opens up underneath it, that pretty much indicates that there's going to be a sale.
Okay, so wait, I have a question though.
Yeah,
So the
yeah.
hardest thing that I had with EMAs is that, like, when price is at the area, to me, you really can't tell what's gonna happen. So like
right
you're
here.
yeah, like
Right.
so what would you do here?
So what I would do here, and so now that kind of gets me into some of the support and resistance and the trend lines and this, that, and the other, waiting for the swing highs and swing lows. But in an area like this, what I would have done by now is I would have realized, let's say looking back at the 15, I see that I'm in a sale. I saw price rejected off the 50. So I'm in a sale. There's a chance that price can reject again. So I'm going to start a trend line looking for a sale. That's just my first hypothesis.
Okay.
And as time progresses, we'll see how it develops. But what I also would have done after I looked at the 15 for that cross, I'm going to go to the 30-minute. So now I see that here's a sale, and I see that price hasn't crossed back over. So it's still on the downside, which means there's probably still room for the sale. I'm going to look at the hour. Same thing. And because there's a cross on the hour, there's a lot more strength to the sale. And then I'm going to go to the 4 hour. So now I have 4 different charts that are all signaling the same thing. I have a cross for sale, and I'm looking. So now when I'm jumping into my actual trade, or I'm looking at possible trade ideas, I have in mind that the market is looking to sell, because you kind of want to trade with the market and not against the market.
Right. The trend is your friend.
Correct. The trend is your friend. The trend is your friend. The trend is your
Thank
friend.
you for the song.
Take that, take that, take that. All right, so now we're going to go back to my German 30 chart. So what I had done on this particular day, well, first I guess we'll kind of get back to this area where you'll see highlighted. So what I've done here is, and when I was watching, when I was learning how to trade indices on IML, Kim Torres, really good, strong indice trader. She does dirty 30s, and they trade the US 30 and the S&P 500. And what she said was, what you want to do is look for power zones. And power zones would be areas where you see price might have a strong rejection, or the area of support is so strong that price can't break through for that rejection, or when you see it reject off of it, you see a big wave move. So what I've done is I went through and I highlighted some power zones. So if you notice in the areas that I've highlighted, you saw price might peak above this level of not support, it's rejection right here. It might reject off this level, but when it does reject, there's a big pip move where it comes down about 2,000 pips. So this level of resistance right here. Now you saw price break through it and it hit another level of resistance, but it wasn't strong enough to make a move out of this zone. But every time price did a break and a retest in this area, there's a huge pip move. So here was 900, almost 1,000 pips. Here, same thing, hit resistance, 2,200 pips. So I've gone through and I've highlighted these, what I call power zones, all over my chart. So last time we were in this area, and now we're going back to the trade from Tuesday that I picked up a nice little bag, as the kids want.
Bag, as the kids. You're funny.
That's right. That's right. In this zone, you saw that once price breaks out of this zone, it makes some big moves for pips. Here, 1,500. Here, 1,700, and such. So kind of all the way through. So I'm keeping my eye on this zone, knowing that if price breaks and retests this area, or breaks through this area, it's going to be a strong move.
Right.
Now, one thing that I've learned in the past is that the indices together kind of move in sync at times. So after I've looked at my German 30 chart and I've gone through my time frame analysis, I'll peek over at US 30 and see what US 30 is doing.
Okay.
Because sometimes they'll give me a tale of what's going to happen.
Sometimes.
Sometimes. Because sometimes they will move opposite. Sometimes they will correlate. And then sometimes you'll have S&P and German 30 moving similarly. US 30 is doing its own thing. Or you'll have US 30, S&P, German 30 doing all the same thing. And NAS will just be on its own. The NAS 100 just is doing its own thing. So I kind of call it cheating a little bit, because I'll look and see what might be going on that can affect the German 30 or my trade. So I peeked in US 30, I peeked in S&P. Excuse me. Get these off the screen.
And you're looking at price action.
I'm looking at price action. I'm looking for the MA crosses and what's happened on those crosses. And I'm looking to see if there's relevance to the German 30. So here we have a cross at 9 a.m. On US 30. We have a cross here like 9:45, but we see prices starting to tail off. They're starting to come back to the crosses. So these are just little weird things or idiosyncrasies that I do. I'm not saying that they ensure that you're gonna have a successful trade. They're just little things that I do that, like a routine, like a baseball hitter when he goes into the batter's box, or a pitcher, or you're shooting free throws. These are just things that once I feel like I'm due them, I'm checking them off. I feel comfortable.
Okay.
So you also asked about gold, because sometimes you'll see gold will either move with the markets, or you'll see gold move opposite, because the strength of gold against the dollar and things of that nature. So that's why I'm peeking into all these, because I feel like they're all connected, maybe not as tightly wound as some pairs, but there's still a connection between the three. So I'm looking for any tails that I could see in any of these markets.
Okay.
So now I go back to my German 30 chart. And what I've done is, when I wake up in the morning, after I've gone through all that other process, I'm going to pull my fib out, and I go from the recent swing low. So we have our swing low here, our 5 candles. This is the low point, 2 to the left, 2 to the right.
Mm-hmm.
And at this time, because I circled the actual trade I got in, this was the high point, with 2 candles to the left and 2 candles to the right. So
you really were trading retracements?
Yeah. You thought I was joking?
I don't know what I thought, but go ahead. Okay.
Yeah. So like when I told Benny the whole week, I sent it in a text, all my trades were basically retracements. I didn't know it until I stopped back and looked at it. But I got comfortable because of some of the tips that he talked about in our Saturday sessions. When I asked a question 2 weeks ago about when to get in on a retracement and when it touches your trend line, and he gave me what I thought was good advice. When basically he was like, when you feel comfortable, meaning after price has retraced the trend line, and you see it starting to move down, that's the time when you jump in. Because when you're trying to limit your drawdown, there's times where price will break your trend line, but then it'll try to retest. And because the trend line is so steep, that retesting will cause you to go into drawdown. So here, and I'll talk about it. Oh, scroll back. Oh, here in this trade, after I have my fib drawn, which I found out my fib is upside down.
Wait, show me how you drew it. You drew it from how?
All right.
Because we never got a chance to do this. I need to confirm that it is upside down.
Correct. So I took it from the swing low to the swing high.
No, that's not upside down.
No.
The old one was.
No, right. That's because I went in and I clicked reverse and switched it before we started the actual live. But this is what it looked like when I did it. And this is the screenshot that I sent you.
Yeah. That's what I'm like, this doesn't look right, but it's working for you though. It
is. And the reason why, and when I was talking to you and Ryan about it, Ryan was saying that all the fib basically does is highlight levels of support and resistance.
Right.
And so I know just from the little bit of market structure that I understand that when a wave makes a move up, the market is generally going to do a pullback or a retracement to a level before it moves to the next wave, just like a normal wave would in the ocean. So after I had my swing low and my swing high, I drew my trend line, and here you can see 7:15. So this is when I woke up. So I guess my trend line kind of looked like this.
Yeah.
This is when I woke up. Here it is. I have a testing of the trend line. This is a 7:30 candle. This 7:45 candle broke my trend line. This 8 o'clock candle is my retest. On the retest, I see it didn't try to touch my trend line, which means I was looking for the move to continue to go down, which this candle did, and this is when I jumped in the trade. And normally on my trades, because I was in that Earn While You Learn group, the way they kind of set up indices was your first take profit was 250 pips, your second take profit was 450 pips, and then I know what Benny has been teaching us about the swing lows and swing highs. You basically can put your stop close to the last swing high because price hasn't broke it again. So this is where my stop was. I know it's 499 pips, but I do understand that when you're trading indices, you're gonna catch a lot of one-to-one trades when you're scalping. So this is where my stop was. This is where I jumped in the trade. I wrote my first take profit was 250 pips. So that's basically, this candle broke my first take profit, and then my second take profit was 450 pips. And here it hit right in this candle, right here, before this candle finished. And by 8:30, I had caught 700 pips. I was done for the day, and I would call that a successful day. Now, as you can see, the move went further down till it hit this level of support. But I mean, this level, yeah, of support. But you can see it stayed right here on this 786. It kept bouncing.
23.6, yeah.
Kept bouncing.
Yeah.
Wait, what is it?
It's the 23.6 when you flip it right. For
Correct.
those who use the fib the other way.
Yeah, and I kept seeing price bounce off this 886, which once again my fib was upside down. So I saw this was an area where I thought price was going to play in a zone. And if you look between 8:30 and all the way to 11:45, it did sit in this zone. So there are some people that will trade in this consolidation zone, but
that's a lot.
It is. And you can make some money and you can lose some money. You can make some money, lose some money, make some money, lose some money. But I thought that I got out at a good time. I had put in, let's say, an hour and 15 minutes worth of work, caught 700 pips. You multiply that by whatever lot size you use, 1, 2, 3, and you're walking away with, a nice,
all right,
a nice little paycheck, right?
Nice little paycheck, yeah.
Right. And that's for one day for an hour and a half worth of work. So later on in the week, I did something very similar. As you can see, I woke up in the morning, popped the fib out. This was my swing high. This was my swing low, actually, of the wave that I took. And I just waited for a trend line break.
A trend line break. Oh, you were waiting for the sell.
Correct. Again.
Okay. So, but this looks like the dominant move of the market. That wasn't a retracement.
It probably was.
Okay.
It probably was, but from when I was looking at it, yeah. I jumped in, took the break, the retest, rode it, and I believe I got out I had to get out before the session started, U.S. session. So
I think I made you, because I told you I closed out, and then it went on and kept just nose diving.
It
did. We missed out on some money.
We did. We closed out on right here. This candle hit this TP right here.
Yeah.
This was the one, because I think this was Friday.
Yeah, Thursday or Friday.
Right.
One of those. Yep.
And then the market, it just kept taking this nosedive, and then it kind of tried to walk itself up. It retested the trend line. But by then I was out, and once again, we had a situation where I caught this candle. We caught 450 pips on this candle, and I had two positions. One TP was at 250, the other one's at 450. So this one candle right here knocked out both my TPs, and that was in about an hour's worth of work. So that's kind of why I got into indices, because to me, I just felt like it was a little bit more rewarding from the standpoint I get to see my work pay off quickly. I didn't have a lot of the patience to do the swing trading. So, that's where it is. Now, I know we talked a little bit about this retracement and this pullback, and I want to segue that into the podcast that we're looking to start, me, you, and Ryan, and we want to talk about what I'm calling the pullback. So coming into 2020, I want to say life was good, right? Nobody was sick. NFL was playing, NBA was playing, stock market was hitting its highs. We hit Christmas, we hit New Year's. The New Year's had started, everything was great. Then we got a little bit of news about a virus that was coming out of China. The president had said we only had 5 cases. It should just magically disappear. Unfortunately, we didn't have any magic. And so from there, as it spreads, this whole year just kind of went downhill. It started with Kobe dying, which wasn't related to the
Yeah.
COVID, but that was sad. And then you
Yeah.
had in March, then you had COVID hit, businesses started to shut down, people started to lose jobs, people started going crazy. And I think it was the beginning of the cascade of this fall. So I think the beauty of the name of the podcast, living in a pullback or living through the pullback, and the information that we're going to teach is how to be successful, how to understand your finances, how to prepare, and how to insulate yourself from situations like this, and having it start with financial education. So we'll get into trading strategies, we'll get into money management, we'll get into a lot of it, just like in trading.
Saving.
Yep, savings and your mindset. Understanding that if you're prepared, my dad always says, if you're prepared, you feel like you can take on anything because there's preparation there. And a good part about preparation is also kind of seeing around corners. So kind of, let's say, estimating the worst that could happen and preparing for that. And if you know that the worst never happens, then you know you're prepared. So I'm excited about the podcast because I think with the information between yourself, Ryan, and my 2 cents, I think we can do a lot to help people understand finances, understand trading, kind of get themselves in order. Because if you look back in this 08, 09, 2010, when the market really tanked, a lot of people who were in the proper positions now are millionaires. And I think that
for sure.
This is another situation where, especially with us learning the skills of trading and being able to share that wisdom and knowledge with other people, this is an opportunity here. Because sure, as we're talking right now, this market, I believe, this is just my opinion, has just started, or this economy has just really started to tank. We have a lot of volatility with jobs, still losing jobs, not knowing what we're going to do with unemployment, Congress not acting right. We have the election. And unfortunately, because so many people were laid off, you have the eviction moratoriums that have been suspended. But eventually, those mortgages and rents are going to come due, which means you're going to probably have a real estate bubble that's going to pop when a lot of people start to default. So if we can help people as well as ourselves, put ourselves in position to take advantage of this unfortunate situation, I believe we can create a lot of wealth within our community, and within just the nation for those that are hungry. So I'm excited about the podcast. Like I said, we're living through the pullback. We're trying to figure it out like everybody else, but we want to implement the knowledge that we have and be able to help you all with what we have. And you guys, a lot of you probably going to take it to the next level because we're not always the smartest people, but a lot of people have, let's say, more resources. So if we can spark something that creates change in somebody's life that will create generational wealth, that's what we want to be a part of.
Absolutely. Absolutely. And for those of you who don't know what Kyle's talking about is we are, well, he spilled the beans. We are putting together a podcast. Ryan Carthage, who's been featured for talking about becoming funded, and my cousin, who just explained, like, you know, he went through some trials and tribulations as far as his job was concerned. We just thought it was good timing to put together another resource for those of you who are subscribed to the channel and for people who like to listen to podcasts. So that'll be coming out really soon. I'll make sure that I let you guys know when we have it all together. Mario says it sounds like a promising podcast. Mario, we hope that you'll listen once we get everything up and going. But we just think that we have, or we spent time learning, you know, this skill, and we want to share it with any and everybody that we can, because it truly has the potential to be life-changing, for sure. So Kyle, I want to go back to your chart though real quick.
Yeah,
so for a trader like me, looking at this, it makes my head hurt a little bit.
It does. It makes my head hurt. I'm trying to figure out what I did.
It makes my head hurt a little bit. So I'm looking at this EMA cross. Somebody asked, or did I already ask that question? The EMA cross. And then you got the Fibonacci on here. And these the trend lines are just so that you can monitor as price is moving. Like the moves haven't happened yet. You're just looking for opportunity in order to get in a trade. So let me ask you, like this is at 6 o'clock. 6 o'clock on the 3rd,
On the 3rd. So
the high
that would
point.
be.
So if you, did you trade this one? I think we missed out on 2 trades because I got out early on both of these. So the initial move down and
Yes, no,
then the
I did not
kind of
trade.
sideways move. But yeah, so let's say, okay, you got to break through that trend line and you see it retest just a little bit above the trend line. When you get into this, where are you putting your stop loss at?
This trade, we're talking about
You didn't
one my
circle it.
finger.
Your mouse, go to the left.
So
Just a little
here,
bit. Yep. So if I was to get in that trade or I say, hey, I want to take advantage of that, where are you getting in at on that?
I
Or I'm
would
not where are you getting in at? Where are you putting your stop loss? Sorry.
I will put my stop at this point right here. And the reason why I would do that is because this is where I saw price creep up. I saw it reject off this a couple times. Now, here at this level, we just saw price reject off this level right here. If I was going to draw a trend line, we saw price reject right here. But the reason why I wouldn't do that, that would be a really tight stop. And the way the indices kind of flow, anything could happen because they deal with fundamentals. So I could have my stop loss right here, and Putin or somebody might say something over in Europe, tweet something that would create a little bit of a swell that might make the next candle pop up to here. Well, if my stop is right here, then I'm stopped out. But this is where price tried to break the ceiling and it couldn't. So I would put my stop here.
The previous high.
Correct. And just roll it on down.
Okay. So you mentioned something that I think is important. I put up here probably about a month ago an analysis, my attempt at an analysis on German 30. I was just learning to trade it. I didn't know. Hold on. I'm sorry. My cat is on my desk. Oh, I didn't know, or rather, what I know now, that it's really, really moved by fundamentals. But do you see any like we talked about it before, that in some ways it does respect structure, but it also reacts to fundamentals. So
Correct.
what you do know about Elliott waves, do you think that it follows as far as the level of retracement and like the profit target with Fibonacci?
I do think so. Now, I like I said, what I'm learning about Elliott waves, I'm just scratching the surface. I'm
Yeah,
not
I know you're still
Mr. Miyagi. I'm the young Padawan with this.
new.
But the structures, and this is kind of how I did with Elliott wave on just, let's say, a very light level. You have the 3-wave patterns, the motive patterns, or you have the 5 motive patterns, and then you have the corrective patterns. But in the motive patterns, you have the 1, 3, 5. And because I'm a music guy, that makes a chord. So as I'm looking, the 1, the 3, and the 5 are all going to be moving in the same direction. The 2 and the 4 are going to be the retracements. And if you look, if you look through the structure, you'll see this. Boom, and then the comeback. The boom, and then the comeback, and the boom. So while, yes, fundamentals do affect the, let's say, impulses in the market, for the most part, it still moves and respects the Elliott wave theory.
Okay. And I'm kind of impressed now. You done opened the book. You talking that language.
Well, what I did was, and what I'll do is I'll send you the 2 videos that I found on YouTube that really explain Elliott waves. They weren't long. They were about 15 minutes in a ways that I got it and I could understand it and I could apply it, because, I did try the books on tape, and it
You
was
didn't like
literally,
my book?
No, it was like Ben Stein. It was like human NyQuil, Visine guy, super boring. And it just wasn't working for me. So I found 2 videos on YouTube that I will send you the links for, and if you want to post them, so newbies can kind of understand what Elliott waves theory is and how it relates to. You can actually use it. It connects it to the Fibonacci. Okay, yeah, sure.
I'm a vet them first, but it sounds like it was decent information that you got. I like those books, even though they're like information packed. Like
Yes.
I told you, I had to buy the audio book and get the regular book and listen to it while I read it and just take it very slow to get the information. But there's a lot of little nuggets in there that you're probably not going to find on YouTube.
I'm
So
quite sure there are little nuggets.
yeah, there are little nuggets in there that little nuances of what to expect when it moves this way or that way. I think you got the basis of Elliott wave, which is excellent. But if you ever, or maybe I should put it together, I should pull it out and then I should give it to you so that you don't have to read the boring book.
Yeah, so if you want to look at it, since you want to talk about nuggets, I got the Happy Meal version of the Elliott wave theory. And you know what? That fed me pretty good. So
yeah, it's working. It's working for sure.
Yeah.
I don't deny that at all. But we definitely, well, I don't know if I want to change up your fibs right now because the way you're using them, they're working. But it just so everybody knows, it's not the typical way that everybody uses Fibonacci. But if you are using it and you found a strategy where it continuously proves to work, I would say stick with that. So I'm not necessarily going to change him up, but he does know the difference between, it being flipped upright and being, upside down. But upside down works. Upside down is making Kyle money right now. So
right. So
to each his own.
And the thing about it was I didn't even know it was upside down. So I didn't even know I was doing it wrong. And it was working. And but now that I know that it's upside down, now I can't unsee it. You know what I mean? So now when I flip it and I put it on, I have to question, wait, is this the right side or is this the right way? So but we'll
when you flip it the
later.
right way, now that you have the extensions in there, you can now like speculate where you can get in and get out. Because I know you text me one morning and you were like, price went exactly where you said it was going to go. How did you know? How did you know? And I'm like, the extensions. So the retracement levels are your entries and the extensions are your take profits. So we always talk about color to color matches. So Kyle has his fib set up how I have my fib set up. So anything that pulls back theoretically to the red levels is going to go to the red extension. And I don't see that he has that on his chart. So Kyle, you want to double click and add that?
Wait, no.
Where's the 618? Negative 618.
I just reverse it.
Oh, there it is. Right, you do have it.
So I can tell you exactly the day that I sent you that text message, we had a very similar trade that came down to the 236. And you said, and I quote, you said that it was probably going to stall because my fib, I think, was upside down. You said it was going to stall between the 118 and the 27.
And that's what it did.
And that's exactly what it did. It got right there. And I was like, well, look at her. Like she knows something.
I'm psychic on Thursdays.
You are. You are. Or you just know how to read a fib and I don't. But anyway, another story for another day.
But yeah. So those Fibonacci tools, or that Fibonacci tool is amazing. If you are not using fib in your training or in your trading, I definitely encourage you to. I can link below a couple of videos where I talk about it, but it'll definitely help you with entries and exits. And so perfect. Okay, Kyle, was there anything else that you wanted to share with the people? Did you have another setup that you had a great win on last week?
And
then also I want to say too, once we get your fib straight, I would encourage you to start using your extensions because you're missing out on a lot of opportunity.
I know, I understand that, but as a scalper, and like I said, a lot of this still kind of goes into my trade psychology. I'm still at the point where it's like jacks, where you drop the ball and you grab the jacks before the ball comes down again. Yeah, so that's kind of where I am. Like, so as a scalper, I'm more like the Nat Turner of scalping. Like, I'm like, and let's get in, let's get out. Like, I'm not long range. So
what if you were able to move your stop down to protect the profits that you would have normally taken, and then just let the trade run to your potential? Yeah.
You know what? I did this. I did that once, and but I set up a demo account to do it because I didn't want to do it in your live account. And I was surprised at how many pips I caught, but the feeling that I had all day waiting for it to hit that extension and watching the waves go up and down, and it was just.
But don't watch it, because if you put your stop where you would have gotten out, like your regular profit is protected. So just go on about your day, because if it turns the other way, you still got your money you would have made anyway.
I mean, that's true. That is true in theory, but I feel like it's easier said than done, because I want to keep peeking. I'm going to keep looking back and looking back. So we'll get to that level.
I'm trying to get a new pair of gym shoes.
Oh.
So I need you to make some more money.
Well, we could have got a new pair of gym shoes with my scalping.
Yeah. With your scalping.
Yeah.
That's all good. But I think as you continue to understand Elliott Wave, as you continue to understand Fibonacci, you are going to become very comfortable with structure, and you won't have a problem letting the trade run and do its thing. I think I texted you one morning. I did, because that was that day. I can't even say. I think I texted you and Ryan. It was like 6:45 in the morning, and I let a trade run overnight. I held it. I wouldn't usually do that because I don't know a whole lot about German 30, but that was a 5-figure morning. Actually,
yes.
No. Yeah, 5-figure morning. Yeah. Yes. And I was like, whoa, okay. So had I let it run all the way, that would have been even more of a 5-figure morning.
Correct.
So, yeah.
Correct.
Yeah.
So,
but like you, I guess my insecurity about this is I haven't traded it consistently enough to be that confident in it. But I think as I continue to trade, I can apply the same principles that I use in forex to this.
Yeah.
So
yeah. That's what I was telling Benny. The trading, the principles and stuff are the same. The market still moves the same way. It's just that I feel it just moves faster. So
it does.
It's less of the delayed gratification.
In the same respect, while it does move faster, it moves faster in the negative and it moves faster in the positive. So, just as quickly as you can make those 5 figures,
you gotta have a stomach for it. You're right.
Yeah,
for sure. Sure.
Yeah. RJ is asking, can you mention the main points of your analysis and your process again, really quickly, if you want to go bullet,
So the main points of my process, and this is tailored specifically to me, is making sure that I am up and looking at my chart by 7:15, because I just found that to be a sweet spot for trading for me. Because I'm trading the London session, I just feel like by that time there's 4 hours of trading that had taken place and the market's kind of settled in, making its move. And it's before the US market opens up, which can create all types of choppy waves. So the sweet spot for me is that 7:15. Start looking at 7:15 in the market. The next step is going to Bloomberg, and you click stocks and you look at an overview of the market. What's going on? Just look at information about what might be happening in the market at the time.
And so when you're looking at that, because I see different columns, I see net change, percentage change, and some are green and red. So what are you looking for again on here in the Europe, Middle East, and Africa?
I'm mostly looking at net change and percentage change.
Okay. And if they're green, you're looking for potential buys, but you want to make sure you have confirmation on the chart for that. And if they're pinks or reds, then you're looking for sales, and you're still looking for confirmation on the chart for that.
Exactly.
Okay.
So we're up 7:15. We're looking in the market. We've looked at our fundamentals. We're looking to see what's going on and have an idea of what the market looks like. And next, I'm looking for my crosses, because my crosses kind of give me an idea about the trend of the market. So here we have a 54 cross, and we have a candle that forms underneath the cross, which means it's going to be a buy. So I'm looking for, it means it's going to be a sale. So I'm looking for a sell.
We got to work on that.
I know. I'm sorry, guys.
Everything is backwards.
It is.
It's all good.
Yeah, I had a joke I can make. I don't know if it's appropriate.
No, don't. Don't make it on my channel.
Yeah.
Yeah.
So I've looked for my crosses to kind of give me an
Mhm.
idea of where price is headed. I've done it on the 15. I might pop in on the 30. I
Mhm.
definitely are going to go to the hour and the 4 hour, because the more crosses and confirmations you have that there are crosses and they're all signaling the same thing, specifically on the 1 hour and 4 hour, that gives you a lot of idea of the momentum of the market.
Right. Because a
So
higher
now,
time frame is the main direction of where price is going.
correct. So
Okay,
after,
so oh, go ahead. Go ahead. Sorry.
I was gonna say, so we've we've opened up our chart around 7:15. We found our fundamentals. We found our crosses. So we found our trend work, I would like to say, and then I'm looking at the most recent swing low and the most recent swing high, because that's where I'm pulling out my fib from low to high, or let's say it was from high to low. That's how I'm pulling out my fib, and I'm looking for my next move.
Mm-hmm.
So my next move is going to come when, and this is where I think some patience comes in, when you have a swing low and you have to wait. What I found was waiting on the swing high. So even though, let's say price is here, let's say I opened up the chart and none of this was here, I'm still not going to jump into that trade until I have an official swing high, which would be this area right here.
What's the swing high, Kyle? For
A
those
swing
who don't
high
know.
is when I have one candle at the highest point, then I have two candles to the left and two candles to the right that are lower than that highest point. So
Okay.
imagine none of this is here, people. Imagine none of this is here. And this at the time was my swing high. I had this candle right here was my high point, two to the left, two to the right. This was my low point, two to the left, two to the right. So I have an official swing low, swing high, and because we kind of understand the way the market is moving with the Elliott Waves theory, the Happy McNugget meal, we know that the market's going to take some of that wave momentum back.
Right.
And it's going to hit levels of either the 236, the 382, the 50, or the 618. All this in the golden zone. But
Now
you
it
can,
could go farther.
it could retrace all the way back to the 886. I don't know, in my trading experience, I've never seen a wave go completely and just break the A. So I have
Right.
never seen a retracement go this low. I'm not saying it hasn't happened, but just in my trading, I've never seen that happen.
Okay.
So I can't speak about it. But like you said, I wait for you can, if you know that there's going to be a retracement, I traded the retracement, meaning I caught the wave at the crest and
Right.
was intended to trade it all the way down to where it stopped on the retracement, but it had already hit my 2 TPs and that was done for the day.
Yeah. And you're really good about that. I'm still working on this myself. Like once once my move has been made, being done, not going back in the chart, not, being greedy basically is
Mm-hmm.
something that I still have to I still got to check myself on. Like you just made how much? Go do something else for the rest of the day, cuz
Exactly.
I've noticed like the more I do that and I jump in, I jump out, I made profit, and
Mm-hmm.
then I go back in, I mess, like I eat away at the profit that I made. So once you make the money, just go. Leave it alone. That's how you slowly start to compound, because you're building and you're profitable. But when you keep going back in, like you're eating away at your profits, and like you're doing all this work and not getting anywhere,
Yes, and I learned that actually from using the IML live, the Go Live sessions with Kim Torres, and she
Yeah.
used to have a guy that she traded with, Luke Longmire, and Luke actually
Yeah.
has his own session, but Luke would say, and even Delando, I hope I'm not saying his name wrong, but they said you can live very comfortably just making one trade a day. So they
Exactly.
talked about that, getting into your trade mentality. Just hit one trade and just be out. Take some time away from it. Go live your life. Be with your family. Take care of your other responsibilities and come back to it maybe in the evening time. So you might do 2 trades. But he said, as you're trying to trade throughout the day, you're going to catch those swings, especially I feel like, especially once the U.S. market opens up, because we're in such a volatile state where Mnuchin can say something, Nancy Pelosi can say something, the president can say something, and it could just change your whole analysis. And it could
Right.
ruin, like you said, the money that you made when the water was calm and the
Yep.
waves were understandable. It can kind of eat away at that. So I guess you might even call it, I got scared to lose the money that I made. Like I said, playing jacks. You drop the ball, grab all your jacks and run.
And run.
And that's how I learned how to, trade and kind of save my profits. So
Yeah, for sure. I agree. It's definitely it's mental. It's so mental. This whole game is mental. If you're in it to get like a business and to be profitable with it. So, I agree all the way. Now, Kyle, looking at this trade, and knowing what it's been doing over the past, let's call it a month, it looks like it's reached a peak. So
yes.
I'm anticipating that it might have a little bit ways to travel. And right now, price to me looks like it's retested the top of that trend line that you have drawn, and it could potentially
Fall.
sell off. Yeah.
Yeah. Well, as we're the market, the German 30 market's going to be popping open pretty soon. But yeah, you've kind of seen it here. It retested this trend line.
Yeah.
And here it tried to climb up and retest it, but it didn't. And then this next candle didn't. So what you might see, just to go back to your question that you asked, you might see another candle fall here, and then you'll see that cross. You'll see that 54 cross. And then, like I said, you'll start going to your other charts. You go to your 30. You go to your hour. Here, it might not even cross because this is going to be a retest. It might reject. And the same thing of this chart, the hour chart. It may not even reach up to the price. So these are just confirmations, or as you geniuses like to say, confluence.
No, God. Okay.
Yes, this
I
is
thought
just
you were an Android
confluence.
genius.
I'm an Android genius. I'm talking to
Not
you,
an Apple
people.
genius.
No, you guys, your level of genius is not quite on Android level. So
Yeah.
I got to talk where you guys talk.
Yeah. So, RJ, I would say too, I don't know if you use any indicators to look for buy and sell positions, but the RSI, stochastic RSI, is a great tool. I know what we use it at is if it's in or above the 80 level, and it's curving down, that looks like a potential sale. If it's at the 20 level or below and it's curving up, that looks like a potential buy. But really, all you have to do is use your trend lines like Kyle was talking about and wait for the price action to happen, and you'll be able to quickly see and make a decision on what to do. But right now, to me, it looks like it's potentially pulling back and retesting the trend line to drop off.
Yep. I did it right here. I did it right here. Price drop, and it's trying to retest it again. And so, yeah, I agree with you. So one thing I'm not sure of is if I'm going to trade tomorrow, because tomorrow is a U.S. holiday, but not for the whole world. So I do believe the markets were going to be open, but I just think that without that U.S. volume, you might be having a slow trading session. So I just think I'm going to stay out the markets tomorrow.
Yep. I think that's wise. I definitely think that's wise. Well, thank you, Kyle, for coming on here and showing us what you do. I appreciate it. And for those of you guys who are watching, if you haven't already liked this video, if you found the information and the content useful, go ahead, give it a thumbs up. And if you're looking for more analysis like this, more information to help you strengthen your trading game, go ahead, subscribe to the channel. And then finally, in the description box, there's a link to our trading mastermind group. Kyle referenced one of our sessions on a Saturday morning. It's no cost. We get together with like-minded individuals who enjoy trading, and we mark up charts and we talk. So if you're looking for a community of people who like to trade and that you can learn from, definitely go ahead and click the link below. Otherwise, again, Kyle, I thank you for joining us, and catch you guys on the next video. Have a great Sunday. Oh, go ahead.
One more thing about the group on Saturday. Even though I trade 90 to 95% of my trades are indices, and it's very heavy with pairs, it gives me a refresher on market structure. And that goes back to our original point that we discussed with market structure, that indices, pairs, even though they're, let's say, different components or whatever that we're trading, price basically, and how fast it moves, there's still market structure. So even if you're a heavy indice person, I still think there's a takeaway that you can get from it because it's a refresher on structure. And because honestly, I think they move a little slower, it kind of puts things at a pace where you can learn a lot easier. So that's just what I want to chime in with.
Your final thoughts.
Yeah, final thoughts.
Okay. All right. Thank you guys for watching. We will catch you next time.
All right.
Bye.
Now. Yep.